What is going on, guys? It's KOJOFOREX, aka GBP Emperor, aka Emperor of Blues. In today's video, I've got a very special one for you guys, right? As usual, you know that anytime I'm on your screen, then it means that I've got something valuable to show. Ain't no time wasting video out here, ain't no clickbaiting, straight to the point, giving you all the gist. Today's video, I kind of titled it, How Risk Management Changed the Game for Me. I've seen a lot of traders really grow on the journey of trading with me, and then they've actually improved in their skills with all the things that I've been teaching, all the nuggets I've been giving out, all the strategies I've been pouring out. But what I've observed really still holding a lot of traders back is their risk management game. People get so comfortable with understanding the strategies, people get so comfortable with just trading huge capital, small capital, but one thing that they've just not got comfortable with is risk management. In fact, even quite recently, I've observed that people have also got comfortable with holding trades, right? I've got traders who just started out trading 1 year ago, 2 years ago, even a couple of months ago, holding trades for 2 days, 3 days, even a month. But I realized that what actually always is wrong in their trading history is risk management. So today, I want to focus entirely on risk management. Now, imagine that I was a beginner trader and then I wanted to start trading after getting the rudimentary knowledge, which I'll definitely get from KOJOFOREX.com. What would I do next? If I don't want to just go through the stress of going to grow small capital, $100, $50, I'd rather put that $100, put that $300, put that $400 towards purchasing a funded account. And if I'm going to purchase a funded account, I'm going to purchase particularly a 100K account from Funded Next, right? I am going to purchase this particular one, 100K from Funded Next, and it costs $549, which is a two-step account. I will favorably choose this one, and I'll tell you why I'll choose that one in a minute. Because 100,000 is a huge capital, and I'm a beginner trader. I've been able to go through the rudiment of learning the trading skills, understanding my entry points, my confirmations, my key zones, and everything. All I just need now is capital to trade. And if I get capital, is that all? No. It means that I have to also have a game plan, which is where risk management comes in. As a beginner trader, I'd assume that even $1,000 should be able to fend for your whole month of expenditure. $2,000, stock of $5,000. Remember, at this point, you're not trying to think you're trading to make that gazillion money and next minute go buy the Lamborghini. Like I say, always trading is a marathon and not a sprint. Everybody has got their own time and chances. So it's better you take it a step at a time. So in focus of knowing that I've got $100,000 funded account from Funded Next, what am I going to do? Risk management, and I'm going to show you how I will deal with risk management. Before I go into dealing with risk management, let's look at the requirements that 100,000 funded account requires from me. So come here, capture the details. If you purchase 100,000, in fact, this is like a 15% profit share from the challenge phase. That's more like a bonus, right? Rather than just not having any money at all during the challenge phase, then here you still get to even share the demo or the prerequisite training skills or phase skills money. Then the most important one again is your first step here, right? You see phase 1 target. You realize that you're supposed to make 8% profit. If you pass phase 1 after making 8%, you go on to phase 2 where you're supposed to make 5% profit, and then you get funded. If you get funded, or even in the process of just trading, right, the challenge phases, you realize here maximum overall loss. This is one of the most important key points to note, is 10%, which is equivalent to $10,000, and maximum daily loss, which is like every day you cannot actually lose more than 5%, which is $5,000. I think this is like the only and the most important point in understanding trading with funded accounts. Guys, you pick the pointers. Phase 1, you're supposed to make 8% profit, but you have 10% risk in overall and 5% daily risk. Phase 2, you're supposed to make 5%, but again, you have overall 10% risk and 5% daily risk. What would I do as a trader? After understanding my sniper entry, my candle confirmation, my key zones and everything, when I come to the chart, chart before I place a trade, first thing I'm going to always do is that if I mark up my chart, let's say you're watching here, this is gold, and I am hypothetically assuming that I want to go short on gold from here, and I want to put my stop loss right above the range like this, which is like 50 pips or 60 pips, and I'm targeting here as my take profit, right? Guys, remember this is a 1:8 trade setup already. If I'm risking 1%, I'm supposed to make 8%. So if I increase it a bit, which is like giving room for the stop loss, which makes our stop loss, let's say 80 pips, then it's what a 1:5 risk to reward, which is still insanely good, right? But for the purpose of this breakdown, let's assume that our stop loss was, let's say 60 pips, right? Around here, which is like giving us this huge risk to reward potential that we are expecting. Now, the question you must ask yourself after you've got a setup like this, right? And again, somebody might be wondering, Kojo, why did you even hypothetically use this setup? Realize that if you zoom out, right, gold made a swing high, approached the 3,430 price zone, and then retraced or reversed, right? I'd rather say reversed entirely, and came back to hit its support level. After hitting the support level, it's just been trading sideways in this minor consolidation range of a rising wedge kind of a formation. So I am assuming that with rising wedge, normally the resulting implication is that the price break down lower like that. So gold might find itself breaking lower. So I am targeting that will potentially sell. Now, if I am trading this and I'm giving you that hypothetical example using the funded account, I'll not just do this perspective and then leave it out there. I have to calculate how much risk potential would be on this, and that is where you need to go on Google and just go search position size calculator. Because I have it here already. You usually have a lot of links that will lead you. Baby Pips has it, my FX book has it. I normally just use my FX book one. XNET also has it, by the way. And then you have here XAU USD, which is the instrument that we want to trade. The account currency is in USD, and the account size is what, 100,000. And the risk per trade. This is also another important point in the whole equation. Guys, if you're trading a funded account, imagine that you're risking 1% per trade. It entirely means that with the scenario that I gave you, where we have 10,000, which is 10% of out of the 100,000 to trade, it means that you barely have 10 times of 1%. It means that if you have trade 1, you lose 1%, trade 2, you lose 1%, all through to trade 9 and trade 10, then you fail the challenge. So you have 10 chances if you're risking 1%. If you increase your risk potential to 2%, then you have 5 chances. Trade 1, 2% gone. Trade 2, 2% gone. That's 4,000 gone already. Trade 3, 2% gone. That's 6,000 gone. Trade 4, 2% gone. That's 8,000. And trade 5, 2% gone. That's 10,000. In fact, most traders will assume that they cannot lose consistently 5 times, but it's very easy for that to happen. So don't get yourself too excited. Anything is possible in the market. So as a beginner, even after going through all the steps and processes and skills, I recommend that you stick between 1% and 2%. If you feel overly ambitious with the setup, go 2%. I have traders going 5% per trade, 4% per trade, sometimes even 10%. Then you're trying to lose the account in the first place, and that's not worth it. You've worked so hard for that $549. Why do you want to just waste it all in just one trade? Meanwhile, you can always survive with just $500, $1,000, $10,000 will even like change your whole life for you. So why not take it a step at a time and rather make that consistent little bit of gains and grow from there? So here I'd assume that we'll risk what? 1%. If we're risking 1%, and with that setup that we put there, which is what? 60 pips, with a trade of gold with lot margins of less than 0.1, right? When we calculate this, you see here, this is where the real result is. It means that what? Money that we're risking is $1,000, and then this is it's in units, and it's telling us to put the lot size of 0.17. So if I come back here, it means that what? 0.17 is supposed to be the lot size I will place on my MT5, right? With a broker that funded next use. If you're trading with your C trader, you're trading with your MetaTrader 5, then you must put 0.17 and put the stop loss at exactly 60 pips. That means that if that trade doesn't go well, guys, you only lose $1,000. But if that trade goes well, if indeed that trade goes well, out of the 8% you're required, you've already made 7%. If you want to be so ambitious and pass that challenge with even one trade, that means that with this setup, you could have actually even taken like 2%, which means that you're risking $2,000. And then if that trade goes well, in this case, 1:2, means that you're making what, 14%. And that means that with only one trade, you passed the whole challenge. And that would actually increase the lot size, to accommodate for that margin of increase of 2%. So here you'd rather put 0.33%, which is still a lot. So risk management is key, guys. You don't want to play with risk management. I think that with this explanation, it gives you the good dynamism of seeing how to play the game of funded accounts, right? I would use the same game plan for a $6,000 account. I'll use the same game plan for a $15,000. I'll use the same game plan for $25,000, for $50,000, for $100,000 or $200,000. The key here is understanding that simple breakdown I've given to you. If you don't ingrain this into your brain, if you don't make this part and parcel of the process, guys, you always fail the challenge. I have traders who have failed 10 times, 20 times, 30 times, they're still buying an account. It's not worth it. When are you going to get a reward off the account you're purchasing? And this is the simple rules and simple steps that is going to get you there, right? So discipline is key. So in summary, guys, I'm telling you that if I'm starting to trade as a beginner, I'll first make sure that I've mastered my skills, which is learning from KOJOFOREX, YouTube, KOJOFOREX.com, and every resource material that I'm going to get, perfect my skills. Next step is purchase a funded account. I'm going to go unfunded next, save up some $300, $400, $500 purchase, $50,000, $100,000, and follow this risk management principles that KOJOFOREX has just taught me, and risk 1% per trade, knowing that I have 10 positions open for risk to reward. Some positions will break even, some positions will make you 1:1, some positions will make you 1:10. But in all, I'll make sure to stick with the plan and grow accordingly from there. This is all I have for you. I hope you really did enjoy this video and it really went down with you. I'm going to come again with a lot of trading knowledge, very packed ones. I'll see you guys in the next video. But before I go, make sure to follow me on all social media at KOJOFOREX and click in the link in the description to join the Telegram community. Also make sure to check out www.kojoforex.com. I just like my website, and click in the link in my description to also purchase a Funded Next account, or visit www.fundednext.com to check out the offerings they have and see the one that best suits you. I'll see you guys in the next video. Peace.